Hi, welcome to this video data, which is on how to make money trading Forex markets, how to basically instantly increase your profit potential, decrease your risk at the same time by following some simple tips. Now, the tips that I'm going to go through are all to do with the way you monitor trades and the trade setups you pick out to trade. Now, in terms of the tips, anyone can learn them, anyone can apply them. Most Forex traders don't, beginners in particular. And it not only can reduce profit potential, it can actually cause traders to lose money. Now, if you want to become a consistently profitable Forex trader, you want to be trading the best trade setups. And also, you need to be very aware of what I would call dead equity. You always want your equity working hard. Now, this will all become more clear when we look at the trading tips. So let's go to a storyboard and go through them all in more detail. Right, just going to have a look at best Forex trade setups and the pairs that you should monitor. Okay, now in terms of your pairs that you monitor and the way you pick the best trade setups, they will ensure whether you're going to be a consistently profitable Forex trader or whether you're really going to struggle or maybe even lose. Now, in terms of pair selection, let's go through pair selection criteria, which just definitely restricts profit potential. Now, there's a view online by a lot of people that you should trade only one pair. Just get used to it, learn it, feel it. It's a big mistake. Why? Because Forex pairs, how often does a single Forex pair basically do nothing? Trade sideways in a range, low volatility. That's really difficult to make money out of. You're not going to make much out of a sideways market. So, you could be sitting for months not making any money or losing by just focusing on one pair. So it's really advice to avoid. Second point, a lot of beginners in particular believe this: trade only the majors due to the tight pip spreads. If you trade the majors, they're the most liquid, they've got the narrowest spreads, so your profit potential is naturally going to be bigger. Well, by all means trade the majors, but what you're really interested in is the volatility in the pair, okay? And pip spreads in crosses, minor pairs, they're not that wide these days. They used to be. Let's say you've got in the majors 2 pips, and you've got in a cross, for example, 10 pips, but the volatility is higher in the cross, okay, and you're aiming for 200 or 300 pips a trade. How much difference really is there in terms of 8 pips on your profit potential? How much impact? Hardly any. Now you might be saying, well, you don't have to trade for 200 or 300 pips. You can trade for less, like 20, 30 or 50 pips, which many people say you can do online. They're all basically not telling the truth. You can sometimes take a small profit like that, but it's not advisable to do longer term, because most of the time you're going to have to place stops outside of the market noise, which is probably going to mean about 100, 150 pips. Well, then you need 200 or 300 on the other side, don't you, to cover your losers. It's a major error, of beginners in particular, to aim for small profits and then put tight stops, because they just end up getting stopped out by the noise and their profits never cover their losses. So by all means trade the majors, but you want to obviously broaden out your horizons, so to speak, and look at more pairs. Now, another bit of advice, which is really strange, I see online, is trade the more non-volatile pairs and avoid the really highly volatile pairs, because they're dangerous. They're not dangerous at all, are they? Because what serious Forex trader doesn't want high volatility in moving markets? If a market is moving slowly and chopping around, you're never going to make any money out of it. So that advice is just totally the contrary of what you should do. Okay. Now, in terms of increasing your profits, basically, first point is obviously pretty clear from what I've been saying. Monitor as many pairs as possible, but how many? How many should you monitor? I'm going to say at least 20. Personally, I'll do between 40 and 50. The more pairs you look at, the more chance you are going to see great trade setups. It's the setup that matters, okay? It isn't the name of the currency pair. Currency pairs move to the same inputs, don't they? So the price chart is a reflection of the sentiment towards the fundamentals behind the chart. The same in any currency pair. So you're after the setup, not the name of the pair, okay? Now, if you are monitoring a lot of pairs, how long should it take you to do your watch list? Well, you should, if you're got a strategy with an edge and you've researched it, you're confident in it, you can look at a trade and within seconds decide whether, oh, that looks really good, I want to have a go at that, or no, I'm going to pass that one by. That's what serious Forex traders are able to do. It's only beginners, and I think it's a common mistake, to think about trade setups for too long or analyze them and maybe try and force a trade out when there's none there. You should be able to do it quick. If you can't do it quick, you need to get back to basics and basically learn a strategy with an edge where you can do it quickly. Now, the crosses and more minor pairs often trend better. Why? Excuse me, I'm losing my voice. The reason they trend better is, if you think about it, a lot of the time, the major economies are very close together, aren't they? With the dollar. The more minor pairs aren't, they're more volatile. Many of the crosses could be more volatile as well. You've also got less noise in the more minor pairs because there's less speculators trading them, so you're not subject to those whipsaw moves. So you often get fantastic trends in the crosses. And when I say more minor pairs, like the exotics, for example, those pairs like, I don't know, USD MXN, USD RUB, USD half PLN, those lesser looked at currencies. They very often give us fantastic trading opportunities. So crosses and the minors, we find generally most of the time making more money out of them than we are out of the majors. I mean, it can change from time to time and you make more out of the majors, but crosses and minors, just focus on them as well. You'll really increase your profit potential. You should always be trading volatile markets like trends in motion, looking for a continuation, or big price spikes where the chances of retracement are high. You want that volatility. You shouldn't be frightened of it. The only exception, I would say, is trading markets that go from low to high volatility. And what I mean by this is you don't actually trade the low volatility. You very often see currency pair in a tight range going sideways. The volatility keeps dropping and dropping and dropping. And then you get an explosion either one way or the other. Those are fantastic trade setups to trade. I've discussed them in a video I did on Bruce Covenor, who used to do it frequently. Because if you go from low volatility to high, the fundamentals have changed behind the chart. You don't even need to know what they are. Just go with the high volatility breakouts. That's a great way of trading. Another great way of trading is trade reactions to high impact news events. You often get high impact news events. You know you're going to get a result quickly. Okay, you're either going to be right and get a decent profit, or you're going to be wrong and get stopped out. Okay, that's what you want. You want a result quickly. Okay, you don't want to be hanging around in Forex pairs when they're not doing too much. You're better off to be stopped out quickly than hang around in a pair for several weeks, wasting your equity in a pair that's doing nothing, then get stopped out. Okay, and I think this brings me neatly to point number 6, which is beware of dead equity. If a Forex market is dead, and let's say you've come into it and you're expecting it to continue with high volatility, it suddenly dies, or the trade isn't doing what you want, get out of it, because you want your money working hard. So shift to another pair that is a better trade setup. Okay. Now, in terms of dead equity, a lot of traders are very reluctant to get out of trades once they've got in them. They might have a small loss, they just want to hang on in there, or a small profit. No, you're trading the market. if you see a better opportunity elsewhere, go for it. If you don't see a better opportunity elsewhere, you can always just basically close the trade and wait, can't you? You want your money working, okay? So, yeah, trading high volatility, being prepared to move your trade when as and when is appropriate. And the other thing to do is to concentrate the bet. When I say concentrate the bet, I should put concentrate the bets. You don't be trading too many pairs. You only want a few. Yeah, 2 to 4 pairs is normally enough, because once you start spreading between too many, you'll very often find your profits cancel out your losses. They don't reduce risk either, because if one pair can go wrong, or two, so can 5, and they can all go wrong at once. And diversification is one of the biggest myths out, that it reduces risk. It doesn't. It doesn't reduce risk, and yeah, basically it's going to dilute your profit potential. So in terms of the tips, they're all pretty simple. Anyone can follow them, and anyone can increase or enhance their profitability with them. Yeah, most beginners will not do these tips, but yeah, they're logical, they're common sense, and they're proven to give you better Forex profits. So that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.